Welcome to REIA, the Real Estate Investor Growth Network with your hostess, Josey. Join like-minded real estate investors and accelerate your business towards greatness. You will hear step-by-step strategies for success, interviews with real estate rock stars, and we will dig deep into past projects where we bear it all, including the good, the bad, and some just plain ugly. So get excited. Here's the bestower of badassery herself, the real Josey. Listener discretion is advised.
Hi, and welcome back. I'm Josey, creator of REIA, the Real Estate Investor Growth Network. Whoop, whoop. On today's episode, we have two guests who will be sharing their badassery. But before we begin, here's today's badassery bestowment, my little badass gift to you. Today's topic is why joining your local REIA is a shortcut to becoming a smarter investor. REIA Nation, if you're trying to build a real estate business in a vacuum, you are doing it the hard way on purpose. Your local REIA, which stands for Real Estate Investor Association, is not just a room full of people swapping business cards. It's a real-life cheat code for faster learning, better connections, and fewer expensive mistakes. Here are 5 reasons why joining your local Real Estate Investor Association is a non-negotiable move. Number 1, you get proximity to people who are actually doing deals. Online advice is everywhere. Real results are not. At a REIA, you can meet investors who are buying, flipping, wholesaling, landlording, and lending in your exact market right now. Number 2, you build a power team without guessing. Need an investor-friendly realtor, hard money lender, a contractor who actually shows up, a property manager who doesn't ghost you, or an attorney who understands creative finance? REIAs are where the referrals are real because they're based on experience, not ads. Number 3, you learn the local rules of the game. Every market has its own personality, permits, zoning quirks, rental demand, neighborhood shifts, what buyers are paying for, and what they're not. A REIA helps you get market smart faster so you stop learning lessons the expensive way. Number 4, you find deals and funding through relationships. Deals move through people. So does private money. When you show up consistently and build trust, you become the person others think of when they have a lead, a partnership opportunity, or capital looking for a solid home. And number 5, you stay motivated and accountable when real life gets loud. Investing can be lonely, especially when a rehab goes sideways or a tenant decides to test your patience. Being around other investors reminds you that challenges are normal, solutions do exist, and you're not the only one trying to figure it all out. So, REIA Nation, here's the badass bottom line. Your local REIA is where your network becomes your net worth. Don't just join, show up. Introduce yourself, ask smart questions, follow up, and build those relationships. Because the investors who win long-term aren't the ones who know everything. They're the ones who are connected to the right people and they keep learning. Now go out there and be that badass. Now, on to today's episode of the Real Estate Investor Growth Network podcast. Today's guests are Voytek Mardula and James Lloyd from U.S. Properties. Voytek is a seasoned entrepreneur with 30 years of experience scaling high-volume operations across multiple industries. He brings a serious operator's lens to real estate with 600-plus home sales closed, over $100 million raised from private investors, and a track record of building and exiting a 300-plus door property management company in the greater Detroit area. Today, he focuses on data-backed high-yield turnkey investing, and his short-term rental division is a market leader managing assets across the U.S. and Canada with more than 12,000 guest stays to date. Joining him is James Lloyd, Vice President of Sales at U.S. Properties with 25 plus years in hospitality and sales leadership. James is known for building strong client relationships, driving marketing strategy, and helping investors clearly understand the value of turnkey real estate while expanding partner networks and improving retention across the U.S. and Canada. It's my pleasure to have them on the show, so welcome Voytek Mardula and James Lloyd. Hello, gentlemen. Welcome.
Thank you so much for having us.
And we're holding this interview in your kitchen, I see. Is that your kitchen back there?
It's part of my kitchen. Yes, it is. I'm at home working today.
Very nice. It's got a good sound to it. So tell us a little bit about you all. How'd you get involved in this game? Give us your background. James, I'm going to start with you first.
Yeah, absolutely, guys. I have a strong background, in customer service. I've always sort of been in that role for over, like you said, for over 25 years, through different industries, the restaurant business and corporate sales and retail. Voytek and I have known each other for many years, and it was about 9 going on to almost 10 years that we heard about what was going on down in Detroit. We were investing locally in our local market, but I think like a lot of listeners, we were struggling. It was hard. It's a tier 1 market. It was super expensive. Taxes were high. Cash flow was low. What do we do? Where do we go? Michigan and what's going on in Detroit, became evident to us. We heard that there was actually a lot of revitalization going on downtown, that the streetcars were being relayed, like the Motown theaters were being restored, and that there were these underlying network of neighborhoods that surround the downtown where we could pick up assets for a fraction of the cost. It was enough for us definitely to get in the car. And, we got down there, we liked what we saw. And, we took a big leap of faith, started purchasing. We had to outsource management, outsource some local construction, but we did it. And, it didn't take very long for us to realize that this was real. And, long story short, here we are 9 years later, after a lot of hard work with 600 homes renovated and sold. And I think what really defines us is that we're fully turnkey. So everything that somebody would need from introduction to what we're doing in Detroit, through maybe getting set up with an LLC, through property selection, construction, management, lending. We have all of that in-house. And it's just been a great story for us and for the city of Detroit of restoration and resilience. And it's really returned to a beautiful place that is definitely one of the iconic cities.
Well, I definitely want to dig more into Detroit, but let's bring Voytek here. Tell us a little bit about you. How did you get involved, and how did you and James meet? I'm just curious about that as well.
So James and I met. He was one of the first people actually I met when I moved to Canada, about 30 years ago. I was in junior high school, sitting in our homeroom, and there was this kid sitting beside me that looked like me a little bit. And I thought, I was like, this kid, I got to talk to this kid. And we've been friends ever since. James has helped me manage operations across multiple industries. I've been an entrepreneur since I was in second year of college. I opened a nightclub in Montreal in Canada when I was 21. It was one of the most popular nightclubs in the city. We had Prince visit and Bjork and some major. Yeah, I got to meet Prince before he passed away. It was quite the treat. Little guy, funny guy.
Yes. I hear he's a ping pong player too.
We didn't play any ping pong, but we did have a couple of drinks at the club, and
nice.
He was there for his concert with New Generation at the time, so we had the official after party. And after that, I got into manufacturing clothing, apparel. We sold brand names in 35 countries all over the world.
Wow.
And eventually, I was in retail, wholesale. Then then recession happened, and I thought, okay, I think I'm going to switch industries. I don't want to be in apparel and in clothing. And I got into real estate at that time, as James mentioned, in our local market, it's tier 1 market where you buy an expensive asset and you hope and pray that the mortgage and taxes and everything gets covered every month, right? And cash flow is often zero, and there's some appreciation over time, of course, but I remember looking at my mortgage statement one day and thinking, oh, wow, I'm going to be 78 when this thing is paid off, right? And thinking, okay, well, that's not great because at 70, what am I going to do at 78, right?
Right.
Everybody wants to have some fun when they're younger. And so I ended up looking at the Detroit market. It was completely by accident, honestly, that I
Yeah.
discovered it.
So
Um, yeah.
were you both in Canada? I heard a little about, so you both were from Canada. How did you find Detroit from Canada?
So one of my good friends lived in Miami, and they came for a New Year's party, and so we were spending New Year's together about 10 years ago. And he was from Argentina originally, and he had told me that he had been to Detroit about 6 months ago, and that he had bought two houses on a credit card. Right. And, and I said, well, what's your limit? Right. He said, no, it's a low limit credit card. And so I thought that's very interesting. And he said, well, I found some contractors and they renovated them, and I'm into it for like $25,000 each house. But the house is renting out for $1,000 per month, right?
Wow.
And so I thought, wow, so you can have your money back in a couple of years, right? From this investment just from rent. And he said, yeah. And he said also the market is appreciating very, very quickly. It just underwent bankruptcy. And so, there's so much interest from investors that are coming in and dropping really heavy investments all over the city, and into residential neighborhoods. And so that was enough for me to drive down. I was a little scared. I gotta admit at first. I thought, because you hear stuff on the news, you're
Yes. It
destroying,
didn't have a great reputation, no.
it did not back then, right? So I said, am I gonna make it back? What kind of neighborhoods am I going in to buy a house for $20,000, right? And so and I arrived there, and he took me for a tour, and I looked around and I thought, wow, these houses look very similar to Toronto, to
Hmm.
where homes are selling for 2-3 million, and they're going for 20-30,000, requiring some renovations. And the cost of construction on these homes is going to be 250, 300,000. Like, they're sizable. Some of them are 1,400, 2,000 square feet. Um, and so we decided to see how many we can buy at that time. We literally sold everything in Canada, including our principal residence, and and went all in on Detroit, 10 years ago. And it was a risk. Didn't look like it does today. Today it looks like a world-class city. It looks like, Manhattan, a mini version of Manhattan when you go downtown. I'm going to say that. But the food is almost as good. The
Mm.
boutique hotels are just as nice. And so, look, we've been there ever since. We've looked at other markets. We've debated going to similar markets, maybe Atlanta, maybe Pittsburgh, Buffalo, Cleveland. All these markets kind of get, pigeonholed together sometimes. And I just couldn't find any reasons to leave, because Detroit has greater population. Is almost 6 million, right? The downtown core is only about 800,000, but that's increasing now. There's census is
Goodness.
showing significant growth in the downtown sector, and and it has an amazing story, and the level of investment and the pace has been incredible there. So we've been just blessed to be there for the
So
last few years.
thank you for sharing all that. And I have been hearing great things about Detroit. And I coach for a coaching program where people from California or where they can't buy and cash flow, and they're looking for other places to invest. And actually, Detroit has been popping up on the radar quite a bit. I know it went through the Motown phase and then the auto industry. What is the draw to it now? Like, what are the
I could touch on that for a little
okay?
bit. When it started to recover from bankruptcy, obviously the U.S. federal government came in with a bailout to help restore some of the essential services and eradicate some of the debt. But it was really at that time that sort of a core group of billionaires who have sort of ties to the city, either from there originally or had ties to it. Most notably, Dan Gilbert from Bedrock and Quicken Loans, Cleveland Cavaliers. They started to come in and they started to invest and really put their money where nobody else was.
Mhm.
Dan really helped sort of clean up the city. He's put a lot of his umbrella companies into downtown. They've just, built and have also purchased many of the office towers. So they've also brought, like by saying that, they've also brought all their companies in there. And there's just been a massive change through the downtown sector. I'd say also, if you're there today, you can really see the presence of the tech sector, sort of Google, Microsoft, Snapchat, a lot of these big tech companies, I guess, due to the office pricing being so reasonable, really moved in. So there's like,
Huh.
as we're there and we're driving around, you can see their presence as well. I know you said the auto industry was there, but it has been retooled. They moved away from the sedans. They really lost that sector of the industry to the Japanese. But what really is selling and what they're manufacturing there are the trucks, the SUVs, the Cadillac Escalades and the Lincoln Navigators. They've restored the original train station downtown into a big tech hub for autonomous and hybrid vehicle development. So it's this level of investment that's come in, from the private sector, from the banking, and from the tech and the auto industry, that's really driving this upside and this appreciation. I think like what Voytek was saying, there are other industries that people think of in the Northeast for cash flow, like Cleveland and areas like that, where I think it is pretty similar cash flow perspective, but I think the upside is greater in Detroit just due to the upside that's going into the city. We've had so much success there.
I get so excited when I hear restoration. I personally live in a historic home and took us about 2 years to renovate this property. So I have a soft spot in my heart for restoring instead of tearing down and building new. So what exactly does US Properties, and by the way, it's usproperties.ca. Is that the website address?
That's correct.
Okay. usproperties.ca. What do you all do? Are you buying some of these historic homes? Because you create turnkey properties where there's people all over the country who want to invest in real estate, and maybe their backyard is not the best place to do it. Like I was talking about people from California, Florida, you have really high insurance prices. So why does Detroit stand out, and what are you offering folks if they want to invest with US Properties?
So, we've been, since we got into the market, we really, as I mentioned to you, we initially came with the intention of purchasing for ourselves, right? And so obviously, we did a huge amount of due diligence on the market, identified the hottest pockets. We were investing, 99% of our wealth into the market. So as you can imagine, we were being careful and really picked the right spot. I feel that the gentleman who introduced me to the market, he had about 6 to 9 months head start on us. So he really did a whole bunch of research and bought 50 homes before we even got there. And so he was able to really bring us right into the quality B-class neighborhoods, where I feel that majority of really good quality long-term turnkey investment lies.
Okay.
We have we've had people who came to us and said, look, like, just can you get us to cheap, and and I said, look, we can go into the C neighborhoods, right? The problem with that is that the tenants don't stay around as long, right? It's like whether this is a Section 8 tenant or a cash tenant, they still have families, they still want to go to good schools, they want to be safe, they want to stay on safe blocks, safe neighborhoods. So when you go into the C neighborhoods, there's a lot more vacancy. And although the price is a little bit lower, what would be the justification of paying $30,000 less to go down full class, right? It's just, $30,000 is not a lot of money in real estate, especially if it's leveraged. We're talking about $7,500 out of pocket to literally go into a much larger colonial and a B-class neighborhood with good schools and mostly high appreciation. Right, Detroit's been doing double-digit appreciation. 2 years ago was the #1 market for appreciation in the country. Right, it went beyond Miami. It was at almost 11%. Right, and the pockets, honestly, that where we operate in have been higher than that. Because that's an average, and considering all areas, obviously, in downtown as well. But so what we really bring to the table, I think it's experience of having purchased 600 properties in the area. We made mistakes in the first couple of years. Like, we mostly got it right, but but sometimes, you go into it and you get tempted and you say, oh, this house is such a great deal and this and that. And then you find out later why, right? And the neighborhood's not great. And so we've really made it, because we've refinanced so many of these properties over the years, we really have seen which ones are hitting the best numbers, and we have appraisals available. We can show people blank out owner or whatever, but we can show you the appraisals in particular neighborhood so you can really see the pace and the growth of that particular neighborhood. So we can, now that we've learned all that over the years, we only really go into good B plus neighborhoods.
Good.
Right? Because we know that that's so I think that that's the number one thing that we bring to the table, is just this in-depth knowledge of the marketplace. And then, of course, we have in-house crews, so we perform all the renovations. We make places Section 8 compliance if that's the direction you want to go. We also offer short-term rentals, which I love that sector. We've been doing short-term rentals in Detroit for the last 5 years, and currently we're one of the largest STR landlords in the city, and managers. So we manage for clients. We really are offering a turnkey solution when it comes to short-term rental management. And we do it at 15%, right? Like, which is one of the most competitive rates I've ever heard of. I don't know anybody who does it at those rates, right? And so most people charge 30% for managing an Airbnb, and et cetera. We're at a really competitive rate, because we want our client to experience the above average cash flow that STR in Detroit offers, because we want you to buy more. We don't, nobody's getting rich from one property, right? But if you can own a portfolio of 10 Airbnbs, that's enough for anybody on this podcast to replace a huge chunk of their income, if not all of their income, right? Depending on what you're currently making, and really enjoy your life instead of working 9 to 5, if you don't like your 9 to 5.
Well,
Right.
walk me through a typical deal. So say someone had a death in the family, came across 100K. What could 100K, would that be maybe 2 properties with 50K towards each property, or what would that look like? What stays in the deal? Are they any type of BRRRR strategy where they can pull out some funds? Walk me through from start to finish what that looks like, what a turnkey, and for a long-term rental. Let's just start with that one.
I mean, that's a great number to have, right? So absolutely. So we've done hundreds of long-term rentals. Like Voytek said, we really focus in these B-class neighborhoods. So there's maybe 6 or 7 that we know super well that sort of are just to the northwest or the north or to the east of the downtown core, about 10 minutes. So if you came up with 100 grand, you would approach us and we'd have a conversation about what you're looking for. Typically, you could get multiple single families, to tell you the truth, because, our sort of sweet spot for a colonial, 3 to 4 bedrooms, 1,400 to 1,800 square feet, new kitchen, new bathrooms, restored hardwood, really a beautiful, architecturally gorgeous home, is around 150,000, right? So it's good pricing, right? And they're renting those out, at 15, 1,600. And where the real kicker lies is that the expenses that eat away at your cash flow are just predominantly less in Detroit. Okay. Things like property tax, insurance, your maintenance, your management fee, it breeds cash flow. That's what initially drew us there. So look, we have direct access to a major US lender. We work with a senior loan officer there. We don't have to put a broker in the middle, throwing origination points over closing statements. So we can get you the financing at 20% down, right? It's very attractive. We could be looking potentially, with a little bit of a buffer, maybe 3 single family homes, right? Or
Nice.
if on the flip side of that coin, and we'll let Voytek get into that, as we expanded our operations and through all these nice neighborhoods where we're doing these single families, we found that there are some historic neighborhoods a little bit closer to Midtown off Woodward Avenue, which is the main iconic street through Detroit, where if we find these larger homes, sort of around 2,000 plus square feet, 5 bedrooms, and do a little bit of a higher level renovation on them, get them professionally designed and furnished with electronics, and make them into very contemporary, modern Airbnbs, they really click. And I think that,
Nice.
Voytek's so great at explaining this, but there's just a lot of tourism coming into the city and a real shortage of hotel rooms.
Nice. But so for someone who has that 100,000,
That would be a good, so that
yeah.
would be a good payment for that as well.
Okay. But you're finding them a distressed property. You're sending your team in to do the renovations, as you said. Is this like a DSCR loan from the beginning, and then that's it? And the 20% stays in there? Or are you doing some type of BRRRR strategy where maybe they can pull out a little bit of that as they go to refinance it? What does that look like? Voytek, I'm going to allow you to take over that one.
Yeah, we've had a large number of clients for in a market like Detroit, where the values are rising quickly, and now, there's an anticipation, obviously, of further interest rate drops in May. There's a change at the Fed level, and there's an encouragement to bring the rates down, and they've been high for so long. They've already started to drop. We've already started to see some more activity in the marketplace. People they would jump over into real estate when rates start to drop. But we've had properties that we've sold to clients. But, look, our model is buy at X, renovate, then we do our markup, and then we sell, right? So if we are able to get a really good deal on a property, and sometimes we're able to buy, let's say, 5 or 10 properties at once and really get a nice price, right? Like we have, for example, I have a property right now that we can be all into a buyer for 175,000, and the comps are showing up for 250. Okay, so there's $75,000 in equity that can be captured. Usually 6 months time is the seasoning period, and we can show you the comps. You can come check it out. It's a larger colonial, and that one would be a good fit for either a cash tenant or potentially a short-term rental. We can make that decision, right? So we've had clients who have bought from us, and we're able to identify and tell, like our last client bought a property for 135,000 and then it appraised for 159. So, about 24,000 in equity. It's decent, all things considered, and he's still getting a fully renovated property, turnkey, Section 8 compliant, and they're able to refi in about 6 months time and pull out that additional equity.
Okay.
So we have lots of clients doing that. We can, if people are looking for some burring and for some stuff that does have equity, and that's going to be their primary buy box or criteria, then we will find those properties for them. We're a boutique agency where we want to provide what the clients are looking for specifically. And of course, we'll give you advice with what we feel is the best in that area and what has the highest yields. And short-term rentals are one perfect example of that. And we even have performing short-term rentals that have been, renovated, let's say a year ago, year and a half ago, and have been operating. So we can show historical data on the numbers, and so exactly what you're getting, right? And what you can expect in 2026 in terms of revenue, approximately.
I love all of that. So let's dive in a little bit to this Section 8. Is there a large need for Section 8 in your area? And how do the rent rates compare to just, say, a typical long-term renter?
Huge amount of renters in Detroit. It's very much a renter city. Within that renter pool, there's a large percentage of Section 8. We came across it and we found it to be such a really good fit for us. I think the quality of it and the reason we've had success with it is due to the quality of the management, right? So they really are vetting and looking through, because within that program, as within cash tenants, there's good people, right? You just have to find them. They're not putting the first person with a voucher in the home. They're screening them to see like what's their background, if they got a record of eviction, et cetera. So we've had a lot of success with it. We really had a lot of success and became very aware that we was such a good fit for us during things like COVID, where there was a shutdown on eviction, and just through some difficult times, where other companies were struggling, our investors were getting paid every month. Right. And I think in a market like Detroit, where there can be sometimes, concerns with the cash tenants within some of these homes, just about the long-term stability of the investment, Section 8 can be a great fit. So there's plenty of pool of Section 8. Our management teams have contacts with local agencies as the properties are becoming ready for a sale to the investor, finishing renovation. They'll look to see what's the voucher amount that would fit the market rent. So we found it to be pretty comparable. Like market rent is market rent. So like home. So if it's a 3 or 4 bedroom colonial and market rent's 1,500, whether that's cash or Section 8, we'll get that voucher, right? The benefits of it, is what we found though, is that Section 8 tenant will stay, 5, 6 years, 7 years without leaving, and we can apply on an annual basis for a market rent analysis and a rent increase. So.
Nice.
Look, there's a lot of benefit there. You're just getting really sort of passive, quiet investment where there's not a lot of issues coming up. As Voytek, as you read at the start of the podcast, Voytek and I used to run a property management company. And I remember sitting through those meetings and, a lot of the problems that really weren't coming out of the Section 8 portfolio, like maybe some of your listeners may imagine. It was actually quite quiet. And as our investors refinanced And we got to take a look inside because of all the appraisal pictures. They're actually being kept very quite neat, and they're taking pride in rentership. So it's been a blessing for us and a really, major stable part of our portfolio for a long time.
I really hate that Section 8 has that reputation because on the renter side, because everybody needs a place to live, and they have to go through extra inspections through Section 8. They have to prove themselves. If they don't follow the Section 8 bylaws or whatever they have to follow, the rules, they're kicked out. So it's important to them to be good tenants, and I just really hate that it gets a bad rap. And I also, on the flip side, for investors, I would not, in these times that we're in, I would not put all my eggs in a Section 8 basket, just because, like, I know Columbus, Ohio in December, all Section 8 took it was a month delay to get paid for that, because I hear investors all the time say it's guaranteed money. It is not guaranteed. And who knows with this administration, if it's going to stay around much longer. I know there might be like a 2-year limit on it and things like that. So I just, as a educator myself, I had to throw that out there. Did you have anything to add to that whole Section 8 aspect? I love working with Section 8, but go ahead.
Yeah, absolutely. I mean, look, I find, look, everything is subject to change, right?
Correct.
You can regulations change in a market concerning short-term rentals, or you can have cuts made to, then you have a change in administration, and they doubled it, and whatever happened, right? What I found with Section 8 is that, look, it's been around for decades, right? You have, I think it's around 15 million families that are supported in every single state, right? And so, for it to end, and you're rendering probably about 30 million people homeless, right? So for that to happen, I mean, you think about the problems associated with 30 million people being on the street all of a sudden, and the crime that would cause. I mean, it would be insanity for government to do that, right? So
that makes sense to us, doesn't it?
It really does. It really does. And I mean, poor families. I mean, you're getting assistance, and like, these families are working. They have jobs. They still have to pay bills. They have to pay, etc. And look, but having said that, 100% of your eggs in one basket is never a great idea. And when it comes to all investment, I think, and which is, I think, why we started the short-term rentals division, because it really gives you a true balance, like, let the Section 8 be your GICs, and, like, slightly, there's still great returns. They're still in the low teens, leverage, all this stuff, right? But have your short-term rentals rely on a completely different sector, which is tourism. And, and it's, and in a city that's building, that's, that now there's no regulations as far as short-term rentals go. There's been discussions, but they realize that they have a real problem, because they have 17 million people coming in every year, and by 2030 there's an agenda to bring in up to 30 million tourists per year into the area, right? And they have nowhere near the hotel capacity, nor can they build enough hotel rooms to even remotely support that. And and during these city council meetings and stuff like that, one of the guys came and said, well, if you're going to regulate Airbnb, I said, where are these people going to stay? Right. And the end, nobody had any answers. Right. And so that's why the regulations are very, very friendly. They're continuing with that. We're able to do it all over the city. And there's, an amplitude of beautiful historic homes, which people love staying at. You have these like 1930s mansions that we renovate, we got, and we new drywall, new trim, new windows, roofs, new HVAC, so everybody's comfortable, and they come and stay over and over again with us, and we feel that, honestly, the returns are some of the biggest in the country. We've looked at other markets and at Airbnbs, and we're doing better than 95% of them as far as returns go. So and it's and never mind the appreciation that's occurring at the same time in the background, right? So we feel like this is just a fantastic vehicle, especially for high W2 income earners as well, right? Because there's all kinds of deductions that you can take advantage of when you own a short-term rental.
Yeah, we don't have time to get into that, but there is the listeners research the Short-term rental tax loophole is what they are talking about. And it is a great opportunity for high income earners to get reductions on their taxes. So that's just a quick, in a nutshell, what that is. But I interview folks who do turnkey properties like this a lot. Memphis is a hot area. Little Rock, Arkansas. I interviewed one in Columbus, Ohio. You all are my first for Detroit. So for someone who's already investing elsewhere, what's the best reason for them to start checking out Detroit?
I think that, look, the population, obviously, and a growing population and a young population that seems to be very attracted to the city, I think are big factors, right? You have the real estate is so affordable there that young people that are starting their careers in New York or LA or Miami, I mean, good luck trying to buy a property, right? Like,
Yes.
unless mom and dad are writing a check for a down payment, and then you're still going to struggle with the mortgage payments, right? Like most of your money is going to go toward mortgage. Whereas, in a city like Detroit, really a young person, 22, 23 years old can finish post-college, go get an IT job or some other work for 70, 80, 100 grand a year. And if I can get you a house for $140,000 and you can come in with a small down payment and actually own real estate, that it's appreciating in a market, and and your mortgage payment is going to hover around $1,000 or less per month. I mean, that to me is a smart way to operate, right? And when you're making 80, 100 grand a year, you have so much disposable income. Enjoy your life instead of being mortgage poor, as so many people are in these tier one markets. Yeah, it's tough. It's tough.
It's tough.
I live in one myself. It's just like so much money just goes to a mortgage, right?
Yep.
So it's tough to deal with.
Voytek, thank you for describing that way. I love that. Are there other turnkey people in like yourselves, companies that you're competing against? I honestly, you're the first I've heard of. So are there others in your area?
There are, but I don't know anybody else who's doing short-term rentals and long-term rentals at the same time,
Good.
and giving clients equity as well and enabling them to BRRRR. I believe we're the only ones that offer that in Detroit, or perhaps even in some other markets as well.
Huge. And thank you for doing that, because I feel like so many people are leaving money on the table by not taking advantage of short-term rentals. So I'm going to direct this to you, James. For someone who is listening, thinking, this is my jam, how do I get involved? What's the first step for listeners that want to start working with you all?
Well, we really would encourage you to reach out. You can check out our website, usproperties.ca. You can come in, you can leave us a submission. You can speak to our virtual agent if you want. We have one program right on the website. It's a she. She's got all the answers. And really, they will really steer you towards a conversation with myself, right? So I reach back out to everybody. You can, like I said, leave a message through our website or email me directly at jamesloyd, LLOYD, at usproperties.ca. And I will 100% get back to you within 24 hours, and we'll set a time. We can either have a Zoom or a phone call. We could talk a little bit more about Detroit, about our turnkey system, about the team that we have, the assets that we sell, and I'll listen to see what your goals are and what might be the best fit. And if it starts to make sense, we can bring Voytek into the conversation, and it'd be our pleasure to help if there's any way we could do that.
And what's a minimum amount that they can get started with?
It's around 50,000 US, right? So, if you have that, we could definitely look at a single family or maybe two, and we'll work through what's available. But that would be sort of like the minimum threshold to get started.
I think
Wonderful.
even a bit less, James. Like I think even with 30,000, right? Because with 20% down on on $150,000 property, 30,000, we can get you started with that.
Wonderful. Well, this has been eye-opening to me, and I can't wait to report back to my students about Detroit. You got me excited. I want to visit. I want to stay in one of those 1930s homes and feel like a celebrity for the day for everything that you all have done to restore those buildings. I do truly, truly appreciate that. I am one of those believers. I live in a historic neighborhood, and we have people come in and tear down houses all the time, and I would love to be able to renovate properties. We have had to tear down as well ourselves, but when foundation, when it's support, what's needed in the neighborhood, et cetera. But it is just a gift that you are giving back to that community. So James and Voytek, thank you so much for doing that. We are going to move to the second part of the podcast here, which is what makes James and Voytek badasses. And I use the acronym BADASS. And I'm going to throw the first one. I'm going to go to James on this one. The first letter is B for book. What is a book that's made a huge difference in your life?
As a Man Thinketh. It's an older book from the turn of the century, but it was one of the pioneering books on the mental state and power of positive thinking, and that we are what we think, right? I have a tendency throughout my life to preconceive that situations or events are going to work out maybe not in my favor. And this is even before they've happened, right? And so much mental energy, it's just tiring way to think. So it's been
Yes.
a big motivation for me sort of in the last 6 months to not think that way, just to be neutral about some things that are going on and say, okay, there's some stuff over there, I don't, not 100% sure of it, but I'm okay. We're going to work it out because my experience will lead me to believe that I can work it out, right? I have a team around me and a support network as well. And I think that book has been a light, really opened the light for me to just have some more healthy thinking patterns.
I love it. The power of attraction. I'm a big believer, and I am attracting a buyer for my new build. I'm
Right.
sending it out to the law of attraction gods right now. So hopefully we'll get that under contract soon. All right, Voytek, you are up next. The first A in badass is for advice. What's the best piece of advice you've ever received? I'm putting you on the spot here.
Right. So I would say to dive into the world of personal development. I would say it's at one point, I think it must have been 15 years ago or more now. I was yeah, I was advised by one of my friends, and she was very sort of studied personal development a lot. And she introduced me to some courses and kind of recommended some books I would read. And one of the books actually was, Rich Dad, Poor Dad by Robert Kiyosaki, which I'm sure all your listeners have read or heard about. But, I think, that book really had a profound impact on me and really made me want to explore real estate. It and yeah, it's some terrific advice, in that book and similar. Yeah, I think that had a profound impact on me for sure. And I've read many books in that space. And ultimately, I think that it all starts and ends with positive thinking. And if you want to accomplish something, the importance of, I would say actually, that, and coupled with the importance of writing your goals down
Mm.
and on a regular basis, like taking the time to write them down and working towards your goals, and coupled with positive thinking, it really is the key to achieving anything you want to achieve.
Absolutely. I love some personal development. Thank you for bringing that up. All right, I'm going to throw this out to whoever wants it first. The D in badass is for drive. What drives you to be successful?
My family, definitely. My priorities have changed. I've gotten a little bit older, a little bit more mature. I have a young son and super proud, right? But moreover than that, just the wellness sector in my life has taken a big upscale in the last sort of 5 years. Very determined to be healthy living, healthy working, raising a beautiful son. And that really is what drives me on a daily basis. Just do it day in and day out. I think that consistency, that sort of regimented, healthy habits that I try, maybe not every day, but for the most part, definitely more days than not, leads to being pillars of support for other things like just overall wellness and health and well-being. And it's an important transition in life to get out of just being myself and to see the bigger picture and to be part of what it is to be healthy.
That health is huge. And this morning I did not get my morning workout in, and I am feeling it today. So yes, I agree 1,000% on that. All right. The second A in badass is for aspiration. I'm a big goal setter. So I'm going to ask both of you, what is a goal you are currently working on? Can be business, can be personal. I'm just curious. So Voytek, do you have a goal you want to share?
Um, yes, yeah, absolutely. So, interestingly, like this year I have another company in the AI space as well, and I love artificial intelligence and the application of AI into businesses. Having been in the business world for 30 years, I have never come across a tool that can revolutionize and help a small business owner across most industries to scale and to operate at a very high level and really create a lot of freedom for themselves and for their families. My number one value is freedom, and so my drive comes from creating that and being able to sort of create my world and how I operate. And I think that one of my goals this year is my AI company. We sell agents, like we sell AI agent, and so we have a pretty ambitious goal to put in 2,000 AI agents into businesses this year.
Nice.
Which is so that's something I'm working on right now. In addition to of course helping construct another 100 Airbnbs in the Detroit area. So those are my two sort of business goals for this year.
Awesome. James, how about you? What's a goal you are currently working on?
Definitely to grow the Airbnb division with Voytek, not only in Detroit, but certainly there now, like you said, 100 units. But my vision and goal would be to do it beyond Detroit with him across the United States and hopefully globally. I really just see that the value in it and the team that we have in place, we can copy and paste some of that and move it around. What a wonderful space for people to like make money and for us to be able to deliver these quality assets. So I'd love to do that with Voytek.
Very cool. All right. The first S in badass is for systems. What systems do you have in place to help you achieve success? Either of you can take it.
So I can take that one. I touched upon that a little bit. We're introducing agents into our business throughout. We have voice AI agents on our website right now. We have voice AIs informing our investors and about everything that we do. Can basically ask an agent anything about our business and how we operate. That's been a game changer for us in terms of being able to inform our investors and really have them have their all the questions and answers provided. And we're introducing all kinds of different solutions into our management and marketing and etc. So which are all AI based. We've also recently, which has been really exciting as far as for our clients in terms of short-term rentals, there are a number of tools out there that are AI tools for pricing. And the way they operate, I mean, it's just phenomenal, right? Because the key to successful Airbnb obviously is occupancy, but it's not occupancy at the lowest possible rate. It's occupancy at a good rate, right?
Right.
And so what these tools do is enable you to get the maximum ADR or average daily rate, but also provide the highest possible occupancy for any Airbnb. And we've been operating at like 55% because we charge higher rates and we have more premium properties and all this stuff, but we have so much room to grow in 2026. We as soon as we implemented these solutions, they started to return right away, and we're getting way more occupancy and way more bookings in February, which is the worst month of the year.
It is the worst month.
The worst, right? So we're so excited about the summer because the summer is just booming in Detroit with events and with space and all that stuff. And so we think we can increase our occupancy by like 30%, wow. Right? Or 40%. Yeah. And so those tools have been completely revolutionary. And so we're just super, and I know this is just the beginning, right? Like this is just infancy. So we're super excited about this and for our investors.
You all have your hands in the right pockets. I'm telling you, this is just, there are companies who focus on just the turnkey and they are with the contractors and doing this and making sure that that have those systems there. But you are thinking so far beyond that in the future for, where short-term rentals are going and things like that. And I'm very impressed, y'all. So the final S in badass is for success. What does success mean to either one of you if you want to take it away?
Well, I mean, it's part of what we're doing now, right? It's being part of something and building a company and having good customer service and a good reputation, being good parents and a good friend and a loyal employee. And I feel success every day when I work with the client base that we have, and my first intention is always to help, right? And it comes from sincerity. We do good business, and it's about that, and it's just about all the good things in success. And if you take care of that, then the finances will fall in place, right? We
Absolutely.
we've ridden this through some good times and some difficult times, and we always just keep putting our foot forward and keep going. And we're really excited about where we're at right now in our development with the team that we have, and really just want to share that with people and help them grow their portfolios and help their families.
Well, Detroit is lucky to have you all for doing what you do, because there are people who will come in and just make it look completely different. So thank you for what you all do. And before we sign off, what is the best way for the listeners to get in touch with you all?
Just to reach out to us through our website, usproperties.ca. You can leave a submission there directly. We get them almost instantaneously, and I'll reach back out. Or you can leave an email at jamesloyd, LLOYD, at usproperties.ca. Either way, we'll be sure to get in touch, and we look forward to the conversation.
Wonderful. Well, thank you both so very much for being here and introducing me to Detroit. So thank you.
Thanks so much for having us, Jen. We really appreciate it. Really
Absolutely. And that is all. Thank you for listening. We'll catch you on the next episode. Now go out there and share your badassery. And don't forget, make it a great day. Take care. Bye-bye. Whoop, whoop.
Thank you for listening to REIN, the Real Estate Investor Growth Network. Be sure to subscribe on your favorite podcasting platform so you never miss an episode. If you need more badassery, you can follow Jen Josey by visiting therealjenjosey.com or become a member of REIN by registering on REINmastermind.com.